you, Nadia. It's my pleasure to be moderating this session. After the very exciting review by Professor, and also the sharing of the continued relevance of integrated reporting to investors by Jonathan, and always a pleasure to have Jonathan with us to be shared from the global perspectives and the direction of the international standard setters and also the global community in addressing the corporate reporting needs. Yeah, so I am going to give Professor and Jonathan a break first, and I'll engage with the representative from the investors. We have Dr. Ismet and Rejina here, and then after that we will also we will also engage some from early adopters like Fadhilah and also Dr. Surina. All right, so perhaps we will then start off with Dr. Ismet, right? So as a CEO of MSWG, you are at the forefront of investor engagement with listed companies. So from your recent dialogue with investor companies, what would you consider to be the key issues or disclosures that investors are most vocal about today? I mean, your perspective on that. Is it relating to strategy, governance, sustainability, performance, or any other factors? And what or perhaps you from your experience, you can share with us also your perspectives on what would you consider to be good corporate reporting that actually strengthen investors' trust, or and perhaps any examples where actually it fell short of investors' expectations. And the last but not least, of course, through your observation, what were the other differentiating factors in integrated reporting that actually provide better value to investors?
Well,
Over to
thank
you,
you.
Dr. Ismet.
Well, thank you, Simon, and thank you, MIE, for inviting me. I think if going back to the question whether strategy, governance, or sustainability performance are the issues that investors are looking at, I think yes, and definitely all, and we can't discount any of those issues. Now looking at the point of how does this come about is technically we are looking at the shift of mindset and the shift of approach that minority shareholders are taking at this juncture. You're looking at greater activism of late. If you go to any AGM, just to give you a background, MSWG is a shareholder of nearly 500 listed companies in Malaysia, and we represent the voice and interest of minority shareholders. We attended about 500 AGMs a year, and we're able to see minority shareholders now stood up and asked relevant and pertinent questions, not just on administrative matters, but looking into issues such as financial, looking into governance, and even looking into sustainability. So similar to MSWG as well, and this is what we are looking at now. And the reason why we are able to do this is because we are technically given a comprehensive information, for which we are able to then look into, raise issues, raise concerns, identify red flags, and discuss that with the company. It's not necessary that we ask question to get into a battle with the company, but it's a normal and natural process of check and balances between us shareholders and also the company. But going through that process, let's talk about the issues and concerns that we identified in companies first, particularly in issues of corporate reporting. We have seen so many issues on corporate reporting. Is either number one, issues on the gaps of information and data not being accurate. We also issue a lot of data that is scattered all over the place. We can't get the connectivity of information, and trying to make sense of certain information. I don't want to say that it's box ticking approach, but I wanted to say that it's just scattered in the sense that we are not able to comprehend and also to digest on the data and information that is provided. I give an example of information such as climate matters, carbon emissions. Every year we are being tabled to us information on how much carbon emission has been consumed by the companies, but at the end of the day we don't know pretty much what does it tell. Is it high? Is it low? What's companies doing about it? Does it matter to the company? So these are the issues that there's not much balance reporting and there's not much discussion on those information, for which then now triggered a lot of minority shareholders to now stand up and ask questions. And that's good. And that's very much what we wanted to do and more moving forward as well. But so then technically, why does this matter? Why do corporate reporting of such matter? Is very much because at the end of the day, you have to understand that shareholders makes decisions on certain aspect. Shareholder has the right to know how the company is performing and what's the direction of the company, because that matters from how they invest. That's the reason why we need a better and also more comprehensive information and a balanced reporting. The most particular one is so that we can make an informed decision. That's number one. Secondly is about, there are a lot of other issues that directly relates to their investments. I'll give you an example: sustainability matters. If the company's business is very much related or directly involved, relates to sustainability issues, be it part of their supply chain or whatever that they're doing is pretty much affected by the change of climate, and the company is not acting on it, or companies are not looking into it, mitigating the issues, looking at the issues seriously, and just imagine in the next couple of years, you will not be able to continue with your business. So, how do you want to actually move forward with that? Issues as supply chain. Let's learn of what happened to our glove industry previously. That's the reason why a lot of time I raise issues on staff matters, injuries, fatalities, etc. It's because just imagine one day, out of a sudden, somebody just block your exports to a certain country, then there you go, you're doomed, and pretty much you'll be losing billions and billions, as what we have experienced before. But this all of the information that has been provided to us, sometimes it's not comprehensive enough. Sometimes it's just a tabling of data. Sometimes it's just about not much discussion on how you're going to mitigate, manage this risk, and how that much relevant to the financial aspect of the company, how much it will impact. If you no longer have, you're producing cocoa, you no longer have cocoa, then just imagine what will happen to your balance sheet in the next couple of years. So this is why we kind of important for us to important for us to have a more comprehensive and balanced reporting. It's very much important, and that's what we've been pushing a lot of companies to now move forward into. No doubt, a lot of more companies have got into the bandwagon of getting better reporting, especially your large companies. A lot more to do for the smaller cap companies, especially companies that's not covered by the analysts or covered by the institutional investors. And that's where MSWG is moving forward in the next couple of years. We are actually now embarking into a journey to look into companies, smaller cap companies, to actually move the needle as well. Because 80% of our population of companies in Malaysia are small cap companies. So, it's not just about focusing on the top 100, it's focusing about the rest of the ecosystem as well. So, at the end of the day, this is why I believe, as what Prof has mentioned, Jonathan have mentioned, integrated reporting could be a tool to help companies to produce better information for shareholders, that helps better communication with the shareholders, and fundamentally it will help definitely us as shareholders to make a better informed decision. Back to you, Simon.
Thank you, Dr. Ismet, for sharing quite a broad area of your experience. You touched on comprehensive information, balanced reporting. You know, well, you prefer information that are not scattered, so connected. Hopefully, integrated reporting does that work. Connecting the information, relevance of the information, looking at yeah, I think the main area you mentioned is more of a comprehensive reporting and addressing all the issues that the investors are looking forward to. And the fact that for certain companies, the investors need to stand up to ask further questions, because it's not so clear from the reporting, right? So that those are some of the points that I pick from I take from your sharing. Now over to Rejina. Rejina, you're an advisor with the institutional investors. Perhaps you should share with us, from the investor's lens, what truly builds or erodes trust in a company's reporting today, and perhaps in your assessment of the performance of companies, are those I don't know, I only hear of like short-term gains, short-term profits gains, still something of a focus, or is it something that are they looking forward to the longer haul? And also another area that perhaps we are also interested to hear is are investors demanding more authenticity over perfection, and also how, from your experience, integrated reporting help to gauge whether an organization is really creating value in the long term and also demonstrating strong governance, rather than just merely telling a good story or showing what is good about the organization.
Right. Thanks, Simon, and thank you, MIA, for having me. I think to start off with, I think what's really important is also to distinguish what IIC does differently from Dr. Ismet's MSWG. So IIC basically covers the institutional investors in Malaysia. So most of our members are the government-linked institutional funds. We also have obviously the big fund managers, external fund managers. So we collectively, our members, which is about 32 of us, collectively have about 2.6 trillion ringgit in terms of assets under management. So we're quite a significant player within the capital markets. And basically, to answer your question, our focus for our members, at least, so this perspective will be from the bigger players, right? So some of the issues that Dr. Ismet talks, I totally agree. But of course, as institutional investors, because we own quite a significant chunk of the capital markets, what you'll see is that we are able to engage with our investors a lot more closely. So from our perspective, what actually builds trust is actually very simple. It's talking about consistency, coherence, and basically courage, right? So when you talk about consistency, it's basically not just about financials, but we talk about your sustainability data, your strategy, and what your management is actually saying on these investor calls, right? So a lot of companies will claim their biggest risk is climate or talent, but if there's no allocation for capital towards this particular risk, so these are the things that investors would actually notice that gap immediately, right? And then in terms of coherence, I think one of the key things is that, just like Dr. Ismet said, we want to see how the different parts of the business actually connect. So we want to see how that financial outcome actually ties back to your business model, your risks, and your strategic priorities, right? So when the numbers, the narrative, and the decisions that actually that you talk about actually lines up, that's when our confidence actually grows, right? And I think you were talking about perfection and all that. I think one of the key things that we are also noticing is that there's a lot more, you need to have a lot of courage to disclose those uncomfortable things, right? So we as investors, we know that no business is perfect, and we operate in a very difficult environment right now. So, so when a company is actually very open about the challenges, some of the missed targets, the cost overruns, the safety issues that Dr. Ismet was talking about, then and how it's actually addressing these issues, then that honesty actually enhances credibility, So I think that's basically what we are looking for. And then in terms of, you know, trust, what can actually destroy trust. What we're not comfortable is when we see basically boilerplate disclosures, right? And, selective storytelling. And, and then sometimes, especially when it comes to sustainability, a lot of this matrix that they talk about, actually there's no method or, any structure to it, right? So, and a lot of the times what we're seeing as well is that the reporting seems to read like a marketing brochure, or some of the companies all, some of the reports all look the same. So these are the things that, if some of the things that so-called material issues uh, is highlighted one year and then disappears with no explanation in the next year, that's when our alarm bells will ring. So we want to see consistency. So, so if there's that lack of consistency will actually erode our trust rather than any bad news, right? So when we talk about sustainability related risks and opportunities. We want to see how it affects cash flow, how it affects to cost of capital. But basically, the bottom line is that we're looking for clarity on how sustainability actually affects the decision making, right? Because we want to know how the business sustains its earnings in terms of this world of transitioning, and what are the opportunities the company is actually trying to actually take advantage of. Is it new markets, innovations? What actually will improve the long-term value? Because as long-term investors, most of our members are long-term investors, we're looking for value creation. So basically, to put it in a nutshell, what we focus on is really in terms of the materiality of the information, the comparability of the information, as well as the credibility. So when we talk about materiality, we want to see what really actually matters financially for that particular business model, right? And then comparability, also we need to be able to benchmark across the peers, right? So obviously, for instance, Simon Darby presentations, I would definitely look at IOI, for instance, right? And then in terms of credibility, we want to see whether the disclosures are actually backed by data. Is there any third-party assurances? And then also, most importantly, what we're looking for right now in terms of IIC is actually, does it actually tie to the board's oversight? Because I think that's one of the key things that we're trying to push in the last few years. Because we want to spot whether this is just a marketing gimmick or basically greenwashing, right? So we want to just be able to ensure that that information can be verified. So basically our members, for our members, it's very easy. This information that we use is basically to price risk and reward properly, right? So that's basically it.
Thank you, Rejina. I've been following your points, so I'm taking notes. I like the three C's you said on consistency, looking at it also not just within the report consistent, but it's also over the years, over the period of reporting. And then you talk about coherence, where connectivity of information is definitely a very important to be able to look at the how all the information connects together. And also the courage to report and balance reporting, right? Not only reporting all the positive, but also even bad news but one of the good thing about in integrated reporting is that when you're actually sharing on what were the negatives, you can also at least also address what the organization is doing about it. So that's also a positive. I mean, to be able to share what the organization is doing, so show that the organization is well managed. And you also touch on the quality of information. I like that point on looking at what is material, the materiality in the reporting, the comparability. You're able to see across different organizations, and also the credibility of the reporting. So I'll definitely take those notes really, and I'm sure Jonathan is ready to go to reflect on some of these comments. So now over to Jonathan, and before that, after that, I'm going to check with the preparer side. Okay, Jonathan, hearing the comments by the investors, perhaps we would like to also hear from you. Basically, they're not only looking at financial performance, but also looking at sustainable commitments, impacts, looking at what is material to the organization. So basically, from your assessment of what you've heard from them, what do you consider as to be the main thing that is affecting or reshaping the corporate reporting landscape? And also, moving forward, what do you think that companies would do to maintain investor trust in this evolving environment where there's greater demand for sustainability information? And also perhaps to also share from your perspective, which sustainability factors are investors truly prioritizing today from your experience looking at it from globally? Are they looking at climate risk, supply chain resilience, or credibility of transition plans? I'm venturing into S1, S2 area already. So perhaps maybe some comments on the rest, what you heard from the investors, and also some of the points that I asked you.
Great, thanks, Simon. Well, I think first of all, it's been fascinating to hear directly from the investors today. I think that point that Dr. Ismet made about minority shareholders having, and it really resonates with me from conversations I have with investors globally as well, having that information and challenging, and I say that with a small c, like you were saying, Doctor, not in a confrontational way, but just being equipped with information that enables that dialogue with the company, and empowering, if you like, the small shareholder, I think is really really important. It also resonates with me what was said by both Rejina and Dr. Ismet around data and data quality and gaps in information. I think that is absolutely recognised, and I think it's one of the key issues at the moment is the data and data quality. And also what companies are grappling with is whether they need to monetize or quantify all the information, or whether qualitative narrative information will suffice. And I think it's really important, particularly as we move down the market cap level in terms of the adoption of these standards, that we think about this in a proportionate way for the companies and in a cost-effective and efficient way. What we're not trying to do is create a burdensome, compliance-based, box-ticking exercise in companies. We're trying to create something that is of value here. And I think regulation, I think investor bodies, I think standard setters like ours, we almost need to change the way we interact with the market. I think we've taken quite a top-down approach. Well, I speak for ourselves, not everybody else, but we've taken quite a top-down approach. We develop our standards, of course, in following extensive consultation. That's part of our due process. But then we set those standards as global standards, and we anticipate that they will be adopted, and that's the end of our role, if you like, in the process, other than reviewing and maintaining those standards. But I think now there's an education role, there's a capacity building role, there's a much deeper engagement role with jurisdictions, and I think this has to be bottom up as well as top down. So I think a lot of those comments resonated with me. I think what reminded me of, actually, when you're thinking about the reshaping of this order, is from some years ago, Goldfields, the South African mining company, when they were starting to adopt integrated reporting, they asked they identified their key stakeholders, including investors, and they asked them what was the most important issue from their perspective that they would like the company both to manage from a KPI perspective and also disclose. And up until that point, the mining managers had been incentivized through their bonuses by the amount of raw materials that they were producing. And what all the stakeholders said was that for a mining company, the most important thing from a value creation perspective and from a societal perspective is casualties in the mine and minimizing and eradicating loss of life. And so from that point onwards, it was a unified point of view. That became the number one KPI for the board of Goldfields, and that KPI cascaded through the business. And I think when we talk about integrated thinking and connectivity, it is seeing that very straightforward. Not every department in the business having its own strategy, its own KPIs, disconnected from how the board is communicating, the top management communicating with their investors and with other stakeholders, but having that alignment of interests, that alignment of performance measures that runs from the top management right the way through to those mining managers. So now the mining managers are incentivized not primarily on the resources that they mine, but on, are they protecting their workforce? That's the incentive, because that is what stakeholders want to see, including investors, because there's nothing more value destructive than a death or an injury in a mine. So I think when we're thinking about reshaping reporting, it goes to governance. It's how your business is operating, and we are about behavioral change. This is not about changing the way you report. This is about changing the way you interact with each other within your business, how you break down those internal silos, how you think about risk and opportunity. Yes, that means investing in data quality, of course, but that is a journey. And qualitative information in the meantime is better than bad quantitative information. And really how that then interacts with your governance. And I think on trust, there are two parts of this. First of all, as the Edelman Trust Barometer points out every year, levels of trust in governments around the world is plummeting. Levels of trust in business actually is going up, but there is an expectation attached to that trust. And that expectation is that businesses step up, they do demonstrate their commitments and the importance of thinking more broadly about value creation, and demonstrate that through the way they're governed and their reporting. And also the accounting profession needs to step up, and its associated regulators, to provide high quality assurance standards so that we can have that high quality reporting that is trusted in the capital markets, that it's comparable, clear, consistent information on a global basis, because many investors operate global portfolios and they want to be able to access Malaysian companies as much as they want to access, high quality Malaysian companies as much as they want to access British companies or Japanese companies or what have you. So we need those consistent assurance standards as well as consistent disclosure standards as well. And that's, I think, how both the business and the ecosystem can step up. I think in terms of the application of S1 and S2, what we're seeing generally is a climate first approach. Climate is more, if you like, developed and mature, but we are very keen to make sure that companies apply S2 and S1 and think about their broader sustainability risks and opportunities, and make sure that they are communicating those as well. And we are obviously working on the human capital and Bs, the biodiversity projects that may turn into standard setting projects, should those research projects develop. But they're the next, if you like, the next wave of standard setting could be in those two areas of biodiversity and human capital. Thanks, Simon.
Thank you, Jonathan. So thanks for addressing those areas on the shaping of the future of corporate reporting, investor trust. And it's interesting that you mentioned that the level of trust in businesses has increased over time. And so therefore it's perhaps right for me to ask from the preparer side. We have Fadhilah and also Dr. Surina. Maybe I should just check with in both the organizations, one of the early adopters of integrated reporting, and you have been at the forefront of responding to investors who are demanding more than just data, but deeper transparency and clearer narratives relating to the sustainability factors and also the long-term value creation of the organization, which you have done in your integrated reporting. Perhaps to share with our participants and also investors out there, what have been your toughest challenges in meeting with the heightened investors' expectation, and also, how have you balanced those expectations with your own organization's need to keep your reporting strategic, credible, and decision useful for them? And also, particularly, I would like to hear from you some of your key highlights and also palpable benefits in relation to your integrated reporting journey. Okay, maybe we ask Fadhilah first, and then after that, Dr. Surina.
Thank you, Simon.
Thank you.
Thank you, Simon, also MIA, for inviting me to this engagement and conversation. At TM, our integrated reporting journey has been a significant part on two things. One is it helped us strengthen our own corporate governance. Second one is deepen our value creation narratives. You're right. We were one of the early adopters. We have been adopting integrated reporting for about a decade now. The very initial challenge to implement IAR from our perspective in the initial US was actually the buy-in to adopt IAR. But then we quickly learned that the biggest challenge to us is not only about producing a report, but more on mindset change, transforming the organization to think measure and communicate value in a very connected way. So there are, as a Paris, there are several challenges. One challenges is around data, managing data complexity, because I think we know that credibility of reporting is very important. Because TM operates, as a large organization, TM operates across multiple verticals, be it fixed, mobile, digital platforms, enterprise solutions, data centers, submarine cables, and all that, right? And many more. And our data comes from all over, from many parts of the organization, often using different systems, sometimes different definitions and all that. So over time, we established standardized data definitions, stronger validation protocols, and clearer reporting boundaries internally, right? So the outcome is a much cleaner, more reliable data foundation that support better decision, and also enhances investors' confidence to our reports. The second challenge was, now we have those data clean, translating this multi-dimensional operational data into meaningful insights. So our reporting again is multi-dimension. Our reporting footprint is multi-dimension, covering things like energy, network efficiency, workforce development, decarbonization plan, digital inclusion, alignment, and many more. Turning this into a coherent narrative require very strong analytical capabilities. So we invested in strengthening these capabilities internally, so we are able to move beyond just reporting what we did, what we have done last year, into why this matters, and who would this information or this data impacts. So the impact of this better clarity is clear, right? So we want the stakeholders and shareholders to understand our contribution towards sustainable growth, our contribution towards national digital growth, our decap journey, and how we manage long-term risks and also opportunities in TM. So the third challenge is relates to scope of business. As we grow in the past decade, our business scope also grow. And TM today progresses into becoming a digital powerhouse from merely a telecommunication company. So the nature of our disclosure must also evolve. It includes new domains. There's a new domains like AI ready data center. We have data center for, I think, about 2 decades now, but now is our data center house technology like AI and also GPU as a service. Now we have to actually report AI ready data centers, the cloud ecosystems, digital inclusion programs. With this, it adds more complexity, but it also allows us to demonstrate broader long-term value creation for TM. The outcome is a reporting narrative that reflects the scale of our TM's contribution and also investment to national competitiveness and also digital resilience. Finally, I think, is talent and capability. I think it remain a continuous factor for improvement with these increasing regulatory and also disclosure requirements. We want to build a team who understand both compliance obligations as well as understand how to do strategic storytelling. So across these challenges, our balance has always been anchored around 3 principles. The first one is validated data. 2 is clear scope of boundaries. And the third one is narrative that connects strategy, performance, and also impact. And I think the fourth element is, of course, about adding more to the credibility is assurance. Independent assurance will add to the credibility. And the discipline of integrated reporting will keep us focused on long-term value and long-term value creation. Of course, Simon, the benefits are very significant to us. Today, the integrated report has become the main reference documents for our stakeholder engagement, be it from investors, analysts, regulators, as well as business partners, right? Internally, the reporting discipline drives better alignment across teams, improves risk visibility to us, and also strengthen our strategy and so strategic clarity. Externally, transparency means that our reputation as responsible, forward-looking organization towards digital champion and something that I think it's paramount important to us. So in short, the IR journey to us has created both tangible business value as well as intangible trust value to our stakeholders. I'll pause at that, Simon.
Thank you. I took a lot of notes there. So yeah, I like that you shared with in terms of you need the data as you embark on the journey of better reporting. You need the data, and then you need the clean data, and then from there you get the insights and the connectivity of information. How do you then share it, right? For the information. And I like the point of why this matters. When you report on certain things, why this matters, to why, rather than just reporting it and looking at the impact and the outcomes that's being achieved, which is a very, it is in the business model and integrated reporting concept, which I find very useful. And you also touched on some of the other areas, such as looking at the scope, the broadening, so looking at a longer term perspective, and also addressing talent, right? And you also touched on some of the principles that you involve in your reporting. Thank you for sharing that. Now over to Dr. Surina. Perhaps you can also enlighten us about your journey in IOI. Thank you. And you need to unmute. Yes.
All right. So thank you, Simon. Thank you, MIA, for having me here today. It's interesting that I've been speaking to investors yesterday and today, and now I'm having this conversation where a lot of them are dominated by what investors want. And I think the greatest challenge that we have is actually having them engage with us to let them understand the issues that they have brought and their expectations, whether or not it is practical, whether it's realistic, because there's a lot of expectation on the part of the investors. They want, for example, as Mr. Labrie stated, biodiversity information. They want nature related. They want all financially accountability towards all these aspects. And the point that we like to also bring them forward in our journey is for them to understand things are not as black and white when you look at nature, for example. When you look at biodiversity, how do you quantify nature? What is nature? All these are very specific terminologies that have specific meanings in different sectors. We are an agricultural-based company. Biodiversity and nature are intrinsically intertwined in our operation. But to measure biodiversity, it's a very broad and requires very specific knowledge and capability, which is not at this point available. Because a lot of the points that they were asking, for example, nature, the task force for nature-related financial disclosure, where they wanted us to measure nature. What is nature? There is biodiversity in soil, there's biodiversity in plants, there is biodiversity in insects, there's biodiversity in flora and fauna. There's so many things, and for us to try and quantify this is going to be very, very difficult, very, very challenging. And so I think one of the biggest challenge that we have is to actually talk to investors in a language that is more or less related towards how they can understand in a more monetary sense. And that, I think, is the greatest challenge. Because when you talk about things like climate change, yes, you have a quantifiable parameter, which is the greenhouse gas emission. But when you talk about biodiversity, how do you count soil biodiversity? How do you monetize the biodiversity of soil? Because it's not by itself. It is with other nature-related ecosystem. And these are the conversation that I have been having a lot with my investors, trying to get them to come to the point of understanding it's not that we don't want to disclose financial impact. It's that how do we do it in such a way that it will not be accused as greenwashing? If we talk about certain things and we put a monetary value and it didn't turn out to be what it is, it makes it very difficult for us to have a benchmark. So this I think is the biggest challenge that I have. It's therefore engagement. That's the best way to do it. Not only just externally with the investors, but with our own internal stakeholders, because they're the one who's going to implement. They're the one who's going to do and help to report. So disclosures are very black and white. If you put the numbers and you don't put a narrative attached to it, it doesn't make a lot of sense. It's very difficult to translate it. So one of the things that we have worked within our organization is to ensure that we have, first and foremost, governance. Governance must be there to make sure that the roles and the responsibility are very clear with all parties, so that when they do the reporting, we know what to look, who to ask, how to implement. The second thing is to make sure that there is interoperability between the different departments within the organization in order for us to report in a very cohesive manner. In other words, when you look at integrated reporting, you have financial statements. You have now also the sustainability, impact and risks and assessment that you need to translate in a financial manner. They need to understand what is climate change, what is net zero, what is greenhouse gas accounting, how do they put the risk and mitigation efforts that we have put in trying to combat climate change into a financially meaningful statement. So this needs a lot of discussion between the financial department and the sustainability department and the operation. And then if you look at supply chain, you need to talk to our commodity marketing people, the marketing people who are involved with the supply chain. So it is about interoperability between the departments in order for us to have a cohesive message to the in the reporting part. And this is where integrated reporting works, because we need to talk to our communications. We need to talk to our corporate secretary, for example. Everybody needs to be involved in it. And therefore, the message that comes out in the report are fully integrated, coming in from all different parts of the department into a cohesive message. So this is the second part that I think is really important. First, of course, engagement. Second is interoperability within the internal stakeholders in order for us to present to you a very cohesive report. Otherwise, it's all about asking a consultant and they take our data and just like write it. But we decided that it needs to be done internally, where we know our operations, we understand what needs to be reported. And I think I look at S1 and S2, the thing that I like about it is that it has very specific indicators that we can look and see that, oh, this is missing, and this is something that the investors would be involved and will be interested, or our customers will be interested, or other stakeholders might be interested. So it gives a sort of a guideline for us when we do our reporting. And at the end of the day, it's all about trying to make sure that the information that we have can be verified in a very clear and structured manner. And the only way you can do this is everybody having the same kind of message, the same kind of understanding of what needs to be reported. Thank you.
Thank you, Dr. Surina. Yeah, okay. So you're saying that the engagement with investors is very important, and also so that you can also demarcate the scope, what could be reported, what couldn't be reported, and what, and so that there is meaningful reporting. And you are looking at, I can understand that as an agriculture-based industry, when you deal with biodiversity, is such a broad area, and so how do you actually then look at how do you monetize, or to what extent you can report that. That's the whole dimension, right, of matters. And the fact that with integrated reporting, you are able then to work to break through the silos, to work together as a team to come up with a cohesive message, right? So I thought that's something that is very, very powerful. And also looking at how the information that is being disclosed could be then verified, to be clear and also structured in a way that that assurance can be provided. Thank you so much on that. Maybe I'll ask Professor. I think you've been waiting a long time since your first presentation. Perhaps for you to share with us from your perspective, based on what all the other panelists have spoken, are you able to then to maybe perhaps give us some insight into what you consider? I think you have a slide on a recommendation of what we could be doing. Perhaps if you can give us some thoughts that you have on what investors should prioritize. I mean, of course, you've heard of what investors want, but perhaps, in terms of what investors can prioritize in corporate reporting today, whether, when you're looking at clarity, comparability, forward-looking insights, or quality of governance, and what are the gaps that perhaps that should be thought of and considered by organizations going forward, so that then we could have a better overall corporate reporting in the future?
Right. Okay. Thank you, Simon. Right. Right. Okay. So I think lots of have been talking about the kind of information that is required by investors. Okay. So we look at from the research, right? Okay. So we look at a bit on the gaps, right? The gaps that remain while we apply the integrated reporting, right? Okay. So while integrated reporting provide better structure and narrative flow, right? Okay. So most of the respondents highlight the gap remain is in terms of data reliability concerns, okay, especially regarding the ESG metrics, right? Okay, and then okay, so in terms of in terms of metrics of the non-financial performance. So I think those are the one highlighted by the respondent from our research. Okay, and another one is in terms of disclosure. Even though I are focused on the forward-looking information, right? Okay, and also to about long-term orientation. Okay, so they also highlight in terms of disclosure remain backward-looking and also compliance driven, right? Okay, so right, okay, so the response also some of the preparers or consultants say that this is we just follow the checklist. Yeah. Okay. So I think the gap remain in terms of the lack of substance, in terms of reporting. Okay, so where governance is often seen as checkbox compliance. So I think those are the two important highlights from the research that they highlight in terms of data reliability, in terms of the metrics, how do you use, okay, and the non-financial performance, as well as the compliance driven. Yeah, right. Okay. So I think that is all, okay, about the gap highlighted from the research.
Thank you, Prof, for sharing that again. And I think it reemphasized some of the areas that even for integrated reporting, reporters, what continue to be an area of focus could be reliability of data, the presentation of the non-financial performance, the long-term orientation, rather than using a template-ish approach, tick the box approach, going beyond compliance, right? Looking at the substance of what needs to be reported rather than just addressing the form, right? Thank you so much for that.